Welcome back to another video. US crypto ETFs just hit 670 million inflows. What it means for Bitcoin and Ethereum. Today our topic is big money is moving into crypto in the United States on the very first trading days of 2026. US crypto ETFs pulled in over $670 million. And this is not a retail hype, this is institutional money. In this video I will explain what these massive ETF inflows really mean for Bitcoin and Ethereum, why Wall Street is suddenly paying attention again, and what US investors should understand right now. Let's start with the basics. In early 2026, USA based Bitcoin and Ethereum ETFs recorded around $670 million in the net inflows in a very short period of time. That means large investors, including institutions, funds, and high net worth individuals, are actively putting money into a crypto through regulated US financial products. This is not a random buying. This kind of movement usually signal as long-term positioning and not short-term speculations for the US crypto market. This is a very important signal. Many people now focus only on Bitcoin's price, but ETF inflows are often more important than price movements. Why? Because ETF reflect real demand. When money flows into a crypto ETF, actual Bitcoin or Ethereum is bought, supply on exchanges tightens, long-term holders increase. In simple terms, ETFs slowly reduce available supply, which can support higher prices over time. That's why analysts closely watch ETF inflows, especially in the United States. This is a key question. ETF inflows are mostly driven by the institutional investors, pension funds, asset managers, wealth advisors, corporate portfolios. These investors does not chase hype; they move slowly, strategically, and with long-term goals. When institutions allocate capital, it usually means they believe risk is lower than before, regulation is clear, the assets has staying power. This tells us that Bitcoin and Ethereum are being treated more like legitimate financial assets, not experiments. So why now? There are a few major reasons. First, regulatory clarity in the United States has improved. While rules still exist, investors now understood how crypto fits into US law. Second, Bitcoin and Ethereum ETFs are easy to access. Investors can buy crypto exposure through traditional brokerage accounts. Third, macroeconomic uncertainty remains. Inflation concern, debt levels, and global instability are pushing investors toward alternative assets. And finally, crypto has matured. The infrastructure, the security, and custody systems are far stronger than they were years ago. For Bitcoin, these ETF inflows are extremely bullish long term. Bitcoin has a fixed supply of 21 million coins. Every time ETFs buy Bitcoin, less is available on the open market. This does not guarantee price increase overnight, but historically, sustained institutional buying trends to support long-term growth. For US investors, these suggest that Bitcoin is being positioned as a strong value, a hedge against uncertainty, a long-term strategic asset, not just a speculative trade. Uh, Ethereum is also benefiting from these ETF inflows. While Bitcoin is often seen as the digital gold, Ethereum is viewed as the digital infrastructure. Ethereum supporters smart contracts, DeFi, stable coins, tokenized assets. Institutional interest in Ethereum suggests confidence in the Ethereum network, future upgrades, long-term utility. For US investors, Ethereum ETFs may represent exposure to the broader blockchain economy, not just price speculations. Uh, does this mean a bull market is granted? This is important to clarify. ETF inflows do not guarantee any immediate bull market. Markets move in cycle. Prices can still go sideways or pull back. However, consistent inflows are a strong foundation. They reduce downside risks over time and increase market stability. Think of it as a slow pressure building under the surface. Mm, this is not financial advice in the last, but there's here's how many U.S. investors are thinking. Instead of trying to time short-term moves, institutions are building positions slowly, focusing on long-term trends using regulated products. For everyday micro investors, the key takeaway in education: understand what ETFs actually represent, why institutional behavior matters, how risk management works, emotion-based decision usually fail, strategy and patience matter more. Uh, this moment is not just about Bitcoin or Ethereum, it's about crypto becoming part of the mainstream US financial system. ETFs bridge the gap between traditional finance, digital assets, and once that bridge is built, adoption tends to accelerate. Uh, this content is for educational purpose only. It is not financial advice. Always do your own research before investing in cryptocurrency. US crypto ETFs pulling in $670 million is not noise, it's a signal. Wall Street is paying attention again. If you want simple clear crypto update, focus on the US market. Subscribe to the channel and turn on notification. Thanks for watching. I will see you in the next video.